And now we come to trade of the day, the highlights of this week's trades. Let's get into it. Welcome to our news series, Follow the Money, where we bring you current news on everything finance, business, the markets, and investment funds. This week, decarbonization partners exceed fundraising target of $1 billion, raising a whopping 1.4 billion in its first fund. A partnership between BlackRock and Singaporean state investment firm. Now, excuse me if I say this wrong. Temasek. The fund is focused on investing in next generation private companies that support the acceleration of decarbonization and the transition to a net zero economy, whatever that means. In addition to commitments from BlackRock and Temasek, the fund attracted a diverse set of over 30 institutional investors representing 18 countries, including public and private pension funds, sovereign wealth funds, insurance companies, corporates, and family offices across North America, Europe, and Asia Pacific. 1.4 billion for a first fund. That's wild. Just goes to show you what's possible when you put your mind to it. So much money on this planet, guys. There's no shortage of money. Also, on Follow the Money this week, hedge fund assets hit a record $4.3 trillion, says HFR. Despite there being ongoing geopolitical military conflict, volatile inflation, interest rates, and macroeconomic events going on in the world, global hedge fund industry asset increased for the sixth successive quarter in 2024. Total hedge fund asset rose by nearly $190 billion over the quarter. $4.3 trillion. There's so much money out there, guys. We can all get some. The financial markets is an ocean of money, but you have to know what you're doing. Welcome to Trade of the Day, a weekly series coming to you every Saturday on I'm the Trader. This is where we show you how you could have made 5% trading the index futures market this week. We love to know where you're watching or listening from, so post in the comments below where you're watching or listening from today. My name is Alice, and I help traders and investors who struggle with confidence to make money in the financial markets find consistency and scale to achieve financial freedom, time freedom, and location freedom. I believe trading is the greatest wealth building tool of all time, and everyone on this planet needs access to this skill. I'm on a mission to impact 1 million people through trading by 2030. Let's go. Coming up this week, this is how you could have made 5% in the market, taking one trade a week, using one model, risking no more than 2% of your equity, looking for a 1 to 3 risk to reward, risking 2% to make 6%. Price action this week was incredible to watch. Every week, I'm learning more about myself and I'm falling deeper in love with IPTA and how she moves. It's amazing. It's an amazing feeling to be able to track IPTA's movement, to know where she's at and what she's doing there, because that's how she tells you where she's going to next. You guys have to experience this feeling, man. It's amazing. As I do this show, I'm growing in myself as a trader, and even though I'm not where I want to be, I have a roadmap I'm following. I know where I'm going with this skill. We had a total of 3 trades this week for a potential return of 12%. Remember, our target for the week is 5%. Also, a reminder, this is not financial advice and that trading comes with real risk. But before we dive deep into this week, let's talk about having a trading edge and what that entails. A trading edge is one of the 3 pillars every trader needs to have in their trading to survive and thrive in the financial markets. Confidence in your trading edge comes from 3 things. 1, understanding the market and how it operates. 2, having one trading model that has IPTA signatures. And 3, having a plan and process that you follow every day. Successful trading is boring. You're doing the same thing over and over again. This is the 3-step process I use to take trades weekly. Step 1, condition. This is based on the higher time frame directional bias. Step 2, stage. What sets up your trade? What does it look like? Step 3, execution. Can you execute? Have your entry criteria been met to get in that trade? The most important step is step 2, because once you understand where the market is going and you understand the setup, the entry is easy. If you understand price flows that occur around key highs and lows intraday, you'll have everything you need for a setup. Step 1, condition. Determine the higher time frame directional bias. Where is the weekly candle likely to go? What is it reaching for? This week, we were expecting the weekly candle to expand higher. That doesn't mean that it has to close higher. As you can see, institutional order flow on the higher time frame is bullish. Down close candles are supporting price. Price is finding it easy to break highs and is not spending long time below lows. Fair value gap BISIs are supporting price higher as well. We are bullish on NQ and we've been bullish for a while now. Retracements will occur in whatever trend you're in. Don't let them fake you out the long term trend, all right? Step two, stage. What sets up your trade? What does it look like? First, we look at the economic calendar. It tells us when to look for a setup. We look for medium to high impact news drives to narrow our focus. We stock setup on calendar day and after the news release. The optimal days to trade this week were Tuesday, Wednesday, Thursday, and Friday, because that's where we had medium to high impact news. Secondly, we look at what sets up your trade. What does it look like? This is called the model. Since we were expecting the weekly candle to predominantly expand higher, we went into the market hunting long formation. For our buy model, we want to see liquidity taking below a kilo or a kilo probed. Displacement higher causes a market structure shift above the kilo. We wait for a short-term low to form in a market structure below 0. At or below 0.25. We place a limit order at the short-term low, stop loss at the swing low, targeting a 1 to 3 always. It sounds complicated if you're hearing it for the first time, but it's really simple. You just need to keep showing up on the charts and look for it. Now let's head over to the charts and look for it in price action this week. Tracking IPTA. This week, I really felt in sync with IPTA. I was following her moves, tracking her moves. And as you can see, the proof is in the pudding. 14% in 1 week. Well, technically 2 days. That was what? $3,625. Yes, it's a demo account, but let that sink in. Let's get to hunting then, guys, all right? Grab your tools. Now we'll be looking at the charts in bar replay mode. This means two things. One, you won't be able to see my executions. However, you will be able to see my horizontal lines, which is for the time I spent of trading, okay? The most important tool you need to track down IPTA, time. To the hunt. Tuesday, April 23, trade of the day breakdown. Our condition is bullish. We're hunting buy formations. Step two, stage. What sets up the trade? What does it look like? First, we start with the economic calendar. And as you can see, we had high impact and medium impact news coming out at 9:45 and 10 a.m. 9:30, from 9:30 to 10 is the opening range. We want to see what price is doing. Is this setting up the stage for our entry at after 10 o'clock? Is order flow bullish? As you can see, we have bullish order flow. Down close candles are supporting price higher. Fair value gap BISIs are keeping price higher. Okay, this is all institutional or bullish order flow. After 10 o'clock, we wait for the signal to jump on board. Please mind the gap in the closing doors. We want to see sell side liquidity taken below a low. As you can see that right here. Displacement higher causes a market structure shift. This is after 10 o'clock. We want to see this. The displacement higher has to have a fair value gap busy near the swing low, or we're not interested in the trade. Okay. So then what are we waiting for? How do we enter the trade? We're waiting for a short-term low to form in a market structure below 0.25. Let me put the fib. Let's put the fib. I took the fib off because it wasn't showing the short-term low clear with the fib. So we're waiting for a short-term low to form in a market structure below 0.25. We had a short-term low form right here. So you would have set your limit order at that short-term low. Stop loss below the swing low, targeting a 1 to 3 always. As you can see, you'd be in this trade at 10:13, breaking even at 10:27, getting out of the trade at 11:23 for a total time of 1 hour, 10 minutes in this trade. Drawdown in this trade was 18 ticks. To make 6% of a 25K account, that's 1,500, risking $500. 6% bag then tag, baby. Let's go. Thursday, April 25, trade of the day breakdown. Let's go. Our condition is bullish, so we're hunting long formations. First, we look at the economic calendar. It lets us know when to look for a setup. As you can see, we had high to medium impact news coming out at 8:30 and 10 a.m. 9:30 to 10 o'clock, opening range. We're not really looking to trade. We're looking to see what price is doing. Is it setting up the stage for a buy? Are we seeing bullish order flow? Then after 10 o'clock, we're waiting for the signal to jump on board the train, okay? So as you can see, 9:30 to 10 o'clock, we had price trade below key low, displacement higher, causing the market structure shift above the key low, setting up the stage for our buy, okay? So 10 o'clock, we're waiting for a short-term low formed after 10 o'clock. As you can see, we had the short-term low right here formed. Short-term low, sell side was taken. Displacement higher causes a market structure shift. Displacement has a fair value gap busy near the swing low. We're waiting for a short-term low to form in the market structure below 0.25 for our entry. As you can see, none of these highs would have created a short-term low for you to get in at. So we have the highest one right here. And as you can see, the first short-term low below 0.25 was right here. So your entry would have been tagged in right here at 1041. Stop loss below the swing low, targeting a 1 to 3 always. Broke even at 1257. Go out of the trade at 138 for a total time of 2 hours and 56 minutes in the trade. Drawdown on this trade was 142 ticks for another 6% in the bag. Woo! Friday, April 26th, trade of the day breakdown. Now, before we get into today's trade of the day, if it's a Friday and you've already made money in the beginning of the week, like, what are you doing in the charts? Come on now. You're asking to give your money away to the market at that point. You don't need to be in the charts, but anyway, let's get into the trade of the day. As we know, our condition is bullish, so we're hunting buying setups. We always start with the economic calendar for the day. As you can see, we have 8:30 and 10 o'clock high impact news coming out. 9:30 to 10 a.m. is opening range. We're not looking to trade. We're looking to see what price is doing. Is it setting up the stage for a buy? Are we seeing bullish order flow? Then after 10 o'clock is when we're waiting for the signal to jump on board of the trade. And as you can see, 9:30 to 10 o'clock, we were seeing bullish order flow, okay? So at 10 o'clock, we're waiting for the signal. We're waiting for a short-term low to be traded through. As you can see, we had the short-term low traded through. Displacement higher causing a market structure shift. The displacement leg does have a fair value gap busy, which is an important aspect in a displacement leg. If the displacement leg does not have a fair value gap busy near the swing low, we're not interested in the trade, okay? We're waiting for a short-term low to form in a market structure below 0.25. We set a limit order at the short-term low, stop loss at the swing low, and we're targeting a 1 to 3. So as you can see, you'd be tagged in this trade at 1019, breaking even at 1102, and after 1102 it does come and knock you out at 1112, ending you for the day at break even, okay? For me, this swing low has to go before I can call that trade not viable anymore. I cannot get in that trade. So since this swing low wasn't taken, it technically just offered you another opportunity to get in. But because of our model, our plan and our model, we have our break even at minus 0.5. We're breaking even. That's it. We're not changing the rules. So you could have got in the trade again because price does come back and take liquidity below the 0.25 right here. Could have got in that trade and you would have been breaking even at that point right here. And you'll still be in this trade overnight because I don't think it's come down to hit. Nope, it didn't come down to hit the break even yet. So all in all, you would have ended Friday on a break even. Total time in that trade would have been 53 minutes. Drawdown on that trade was 143. So we didn't lose any money. We didn't make any money. It's a Friday. What are you doing in the markets anyway? Anyway, that'll be all for tracking IPTA this week. Real quick, this was Tuesday's entries. I just wanted to show you guys that I did take a trade. I got in this trade when price took that short-term low at the 10 o'clock. That's when I was in that trade. Going right here, exiting right here. The proof is in the pudding. Tuesday, April 23, right here. That was my 5% for the week, and I was done. Even though you do see other trades, that's just me testing out a few things that I'm noticing in my trading, okay? But on Tuesday, I would have been done trading. As you can see, on Wednesday, I took a counter trend trade just to test out the sell model. It panned out. But usually I would just be looking for buy setups because we're in a buy program, okay? This week, we showed you multiple opportunities that could have netted you at least 5%. With a 2% risk, if you had taken all three of these trades, you'd be looking at 12% for the week. Again, it's not bad for a week's work. But remember, we're only looking for one trade that will net us 5%, and we're done trading for the week. As traders, we must be content with enough, and we must learn to limit trade frequency. The less you're in the market, the less of your money it will take. This week, we were anticipating the weekly candle to expand higher. And as you can see, we had an expansion to the upside, and the week did close bullish, an up close candle. We hunted down multiple buy formation this week that could have netted you 5%. Price action this week again was amazing to witness. I hope you found trade of the day insightful, and hopefully you enjoyed this one. Deciding to become a trader is the best decision you will ever make. It is the fastest way to build the life that you want. And too many of us fail at it, 90% actually, because we're not equipped with the right tools to ensure survival, let alone thrive. There's a way to succeed at trading. Trade of the day is about showing you how we at I'm the Trader are doing it and how you can do it too. Always remember, this skill is not easy to master, but it's also not impossible. You only fail when you quit. Thank you for watching. See you all next Saturday, same time, same place. Happy hunting.